Welcome. Today we're going to be talking about the Donchian price channels. So what these do is they show the trading range over a specified period of time. It's made of three lines. There's going to be a high, a low, and an average. And the high line is going to show the high price during the period. The low line or the lower band is going to show the low price during that period. And the average line is going to show you just an average of the high and the low prices. Today we're going to start with 20 days. So the top band is 20 days and the bottom band is 20 days. You might notice that this looks similar to the Bollinger Bands. It's a much simpler setup, but it uses similar concept. So price action towards the top of the band can be seen as bullish. Price action towards the bottom can be seen as bearish. And in terms of volatility, wide spacing between the bands like we have over here, it's going to indicate higher volatility, and then smaller spacing is going to indicate lower volatility. As usual, we're going to combine this with a few other indicators. You'll see that we have the MACD here and 20-day moving average here in purple, in addition to the Donchian price channels on this chart for Ford. So let's go to 21 May. And you'll see that here's the price channel. And on 21 May, it broke the upper channel for the second time. It's twice because once it's going to break the channel, and the second time is we're looking for confirmation. You can see that the price is above the 20-day moving average. MACD had a signal line crossover and a center line crossover within the week. And so this would be a time to open a position. Using the closing prices, this would be opening a position at 1333. And so if we take this out, you can see here's the lower price channel is rising, and then it drops off. And the 7 July, it breaks the lower channel for the second time. All right, so that's here. And the price is below the 20-day moving average. You can see that. The MACD is below the signal line. It's trending downwards. And so if we're strictly using the price channel bands, we'd close this position out at 14.23, 90 cent a share profit. At the same time, this is a good example of why I wouldn't only use the price channel bands to close this position. So when we open our hypothetical position, we had better technical support. So back in May, the MACD had a positive signal line crossover on 14 May. And then here we have a center line crossover on 20 May. Price also closed above its 20-day moving average here on the 17th. And on the 18th, you can see it's the second time it closed above its average in the channel. So there's a lot of good support here from the other indicators to open up a buy position, within this time frame. Let's use these same indicators and look at the warnings we would have received if we use them instead of just using the lower bands, right? So here we have a negative MACD signal line cross on the 14th of June. Then here, right, it's closed below its 20-day moving average for the second time. And so we've had one indicator, which was the MACD, and here's our second one with confirmation on the 20-day moving average. And if we close this position out here, we would have closed it out at 1478. Stick it out here. On the 28th of June, Ford closes below the channel average for the second time. And here this is at 1496. So if we used either of these other technical indicators to get additional confirmation after the negative signal line cross, we would have preserved anywhere between 55 and 75 cents a profit as compared to just using the Donchian channels by itself. So another thing we can do is we can change the time period. So we'll do that here. We'll make the lower channel 10 days. instead of 20. So because our position or hypothetical position is a long one, we're going to shorten the lower band. Now you can see that the bottom band is only tracking the lowest low in 10 days, right? So here we are on the 16th of June, drops on the 17th, and it drops on the 18th. Closing price there is $14.52. So just by adjusting that lower band, if we were only going to use that band, that would have preserved another 29 cents in profit as compared to using the standard 20-day time frame for both the top and the lower bands. So here you can see we've used different ways to go about finding opening and closing positions on the long side using the Donchian price channels, of course, with the addition of other indicators, specifically here, the MACD and the 20-day moving average. Also, we've changed the bottom channel on the Donchian to 10 days, shortening it up, giving us faster signals on the downside so we can get a better read on when to close out our position. So hope that's been helpful for y'all. Make sure you like the video, subscribe to the channel, and let me know what y'all think in the comments.